Okay. Welcome back to Cost and Management Accounting Exercise. In this video, we want to look at the preparation of the production cost statement and the statement of profit or loss. So, for the income statement, so we are going to go through question 5 on that question paper. And it reads that the following information was taken from the books of both manufacturers. So, we're given a table that we are given there of inventories, whereby we are given a column for 2015 being the previous year and 2016 being the current year. And then you are given transactions recorded, you are given a list of balances that you are given there. And if you go down the question, we can go to the next page and try to see what we have. We've got only one additional information that reads our manufacturing overheads are applied at 70% of direct material used. Very important. We'll go to required part and prepare a production cost statement for the year ended on 29 February 2016. Then part 2, calculate the income statement for the year ended on 29 February 2016. And let's try to see on the part of marks. So if you see in the first part, that is on the production cost statement, the question is 20 marks. And on the preparation of the income statement, the question is 10 marks. So total, we've got 30 marks. So we're going to start with the production cost statement. And in the production cost statement, obviously, we will start by calculating the cost of material. So if you go to our answer section, you'll see that we already have a production cost statement of both manufacturers for the ending 29 February 2016. And we're going to start by calculating material. So under material, we are going to start with the opening stock of the direct materials, and then we follow as we go. So we are going to start with opening stock, obviously, of our direct materials. So we go to the question there and try to. So the formula that we're going to employ here is we're going to say opening stock with 8 purchases, and then we less our closing stock to get our material used for the year, or the cost of the material that has been used for the year. So we go up there to check the opening stock. Obviously, we have a list of balances that we have there for our material control. This is what the balances that we are checking. So opening stock is for the previous year, which is 57,000. So we are going to start with the 57,000. Then we add our purchases, which is 250,000. So material purchased is representing our purchases 250,000. So remember, the formula that we are going to employ is opening stock, we add our purchases, then we subtract your closing stock. So opening stock, we have 57,000, purchases 250,000, closing stock is for the current year, which is 43,000. So we are just going to input those figures as they are. So we are saying opening stock 57,000, and then we add our purchases. Our purchases, we've got 250,000. And when we add the two, you get your 307,000. And this is going to represent your material available for use. Then you now subtract your closing stock. Remember, we identified that closing stock, and it's 43,000 according to the question. Then we subtract it. So when we subtract it, we are going to get your material used for the year. And the other is going to come in this column. We say 307,000 minus 43,000, you get your 264,000. Then from there, we are supposed to add our direct labor, so that we can get our prime cost. So we are saying direct labor, and we check in the question which figure for direct labor do we have. Direct labor, we are saying we are here 70,000. So this is our direct labor. So we go back. So if you add 70,000, we are now saying 264,000, and then you add your 70,000. You are going to get to 334,000, which is going to be your manufacturing. Sorry, which is going to be your prime cost. Remember, we say the direct materials plus direct labor get your prime cost. And then beneath that now, that's where we're going to have our manufacturing overheads recovered. Manufacturing manufacturing overheads recovered. But on the manufacturing overheads recovered, we go back to the question to see the instruction that is giving us an instruction to calculate it on additional information. They are saying manufacturing overheads applied to 70% of direct material used. 70%. So if you go to our answer section, remember we calculated direct material used. Direct material used is here. Material used, this one, which is described here. Material used for the 264,000. So to get the manufacturing overheads, we are saying 70% of 264. So in brackets, we are saying 70%, which is 0.7 as a decimal, times 264. So we can just try to calculate it as such. We'll still say as 0.7, and then we multiply by 264. Then we're going to get 184,800. 184,800. That is the manufacturing overheads covered. So this is the figure that we are going to compare with all manufacturing overheads that we are going to list here. And then we are going to identify an over recover or an under recover. So as we go, now beneath this, we are now just going to try to go to this question and try to see all the overheads that we have, and then we list them beneath here. And then after that, we add the total of those overheads. That total will compare it with this total, and we see which one is greater. From there, we can see if it's an over recovery or under recovery. So let's just try to see. Let's go to the question and try to find all the overheads that we have in the question. We go down, and there you see that we have indirect labor here is 44,000. We have administrative cost is not in manufacturing overheads. We leave it. Insurance of factory, yes. This one is in manufacturing overhead. Marketing cost is not a manufacturing overheads. Electricity for factory, yes. It's a manufacturing overheads. Then also have rent of factory premises. Also anything that has to do with factory is a manufacturing overhead. And then we go to depreciation of factory equipment again, which is 32,800. It's also a manufacturing overhead. So these are the manufacturing overheads that we have. So we can just list them. We have got 1, 2, 3, 4, 5. So we can go there and list them as they are. Indirect labor, 44,000. Insurance of factory, 42,000. Electricity for factory, 40,600. Rent of factory premises, 26,400. Depreciation of factory machinery, 32,800. So you can just go there and list them. So we are saying we have got indirect labor. Put 4,000. Then we have got insurance or factory. $42,000. And then we have got electricity or factory. $48,600. And then we have rent of factory premises. $46,400. Depreciation of factory. So this is what we have. So you'll see that we have these manufacturing overheads that we have, and obviously we now want to add the total of the manufacturing overhead that we identified in the question. That is 44,000 plus 42,000 plus 48,600 plus 26,400 plus 32,800. So we can just try to see what total do we have there. So the total that we are getting is 193,800. 193,800. So we are saying 193,800 is the total. So we are comparing it with this one for uh, manufacturing overheads recovered. So if you come here, you see that this one is the manufacturing overheads recovered. So if the total that we got here is greater than the manufacturing overheads are recovered, we are going to show it as a negative here and transfer it to cost of sales. We are going to show it as a negative here and we transfer it to cost of sales. And it shows an under recovery. So we show the difference. So we're saying 193,800 minus 184,800. And we are going to get an amount of 9,000. So this 9,000, so the total that you are having there is greater than this one. So we have to reduce it so that it's equal to this one. So by reducing 183,800, we should subtract 9,000 so that it gets to 184,800. So we are going to show it as a negative here. And we transfer it under cost of sales as an under recovery of manufacturing overheads. So what we are saying is if this total of manufacturing overheads elements is greater than the one that we have calculated here, is going to show in under recovery. If it's less than, it's an over recovery. So let's try to see. So when you come here now, we are saying uh, cost of sales or under recovery of overheads. Under recovery of manufacturing overheads. And then the amount that we are putting is 9,000 and we are putting it in brackets. to subtract it so that it gets back to the applied one. So if you now add here 44,000 plus 42,000 plus 40,600 plus 20,400 plus 32,800 minus 9,000, it should get back to 184,800. So this is what we have. Then from there now we can add to get the total cost of production, whereby we are now saying the prime cost plus the manufacturing overheads recovered, whereby we are saying 334,000 plus 184,800. Then we are going to get your figure for uh, total cost of production here. So the total cost of production that we have there is 518,800. And then from there, you can now add work in process, which is the opening. Add work in process, opening. We can just abbreviate it as work in process. Then we're going to check the figures for opening and closing work in process. So it's that work in process is here. We have 43,000 as our opening, and then we've got 22,300 as our closing. So the opening you add, then the closing you subtract. So we come back again. So opening work in process, we have got 43,000. So we are saying here 43,000. And we add the total that we are supposed to get by saying 580,800 plus 40,000. 43,000 is 561,800. Then obviously you go now to the closing. You are now subtracting closing. Less closing work in process. And then the answer that we are going to get is 22,300. Then you subtract there, and then you get your answer, which is going to be 539,500. Cost of and then the figure that we get there is going to be your cost of production of finished goods. Cost of production of finished goods. So this is what we have. So this is going to be your final figure in the production cost statement. So this figure, you're going to transfer it to the trading account, and it's going to replace the purchases in the trading account. Remember, this is a manufacturing business, so it doesn't engage the buying and selling of products. It manufactures the products, not buy it. So the purchases part is going to be replaced by our cost of production of finished goods when you're now in the trading account. So having that, we can go now to our income statement. So this is our income statement of both manufacturers. And in the income statement, we're going to start with the figure for sales. We go to the question and check what we have in terms of sales. Right, our sales is written as 10 over 840,000. So you can go there and say 840,000 in this column. Then from there, we are saying cost of sales, less cost of sales, whereby we are going to start with opening stock of finished goods. Opening stock of finished goods. We go to the question, try to see what we have in terms of Opening stock of finished goods. Finished goods is here. So we have got opening stocks for 2015 is opening, which is 56,000. So we can go back. We're saying 56,000 in this column. So remember, if it's a trading business, we are supposed to say 8 purchases here, but we're not going to do that because it's a manufacturing business. So we're going to replace the figure for purchases with a cost of production of finished goods. Cost of production. So we are adding cost of production. And then we take the figure, the final figure that we got in cost of production, which is, let's just check it. So this was our final figure for uh, cost of production. Cost of production of finished goods, 539,500. So this is the figure that we are going to put in the trading account. So we are saying 539, 539,500. Every year now, we are supposed to add under recovery of manufacturing overheads. Remember, we did found in under recovery there, under recovery of manufacturing, under recovery of manufacturing overheads. So we can just refer back to see the amount that we have for under recovery. Remember this one. So if this one is a negative figure, it's going to be, you are supposed to add it in the trading account. If you get a positive here, you are supposed to subtract it in the trading account. So this is what we have. So we are going to just take 9,000 that we have here. And then we have got our 9,000. So having done that now, you now subtract your closing stock, which we are going to find again in the question. So remember, we've got opening stock of 56,000 finished goods, so our closing is 44,000. So here we are saying less closing stock, which is 44,000. And then we subtract, now we say 56,000 plus 539,500 plus 9,000 minus 44,000. You are going to get your cost of sales, which is going to be 560,500. And then we are saying less here, so we are subtracting. So now it's 840,000 minus 560,500. And then the answer that we are supposed to get here is going to be your gross profit, which is 279,000. 279,000. 279,500. So you see that we are going to have a continuation of our income statement. Remember, now we want to subtract your other expenses so that we can get our net profit. So let's just try to see how we get there. So after this, now we are saying less other expenses. So we are going to check other expenses that we have in the question. So we can just go there in the question and try to see what other expenses we have that we're supposed to subtract there. So If you go down, you see that we've got administrative costs that we have there of 52,000 that we need to include. We've got also marketing costs that we have there, which is 35,000. So we are going to include those two, and we subtract them so that we can get our net profit. So let's just go there. So here now we are saying uh, administrative costs, and then the amount that we are having. The amount that we're using is, let's just try to verify the actual amounts. Administrative is 52,000. So with 52,000, and then with also marketing. Marketing cost, which is 35,000. Then we add 52,000 plus 35. Let's try to see. You get 87. Remember, it's going to come in line with less other expenses. So this total for other expenses that we have 87,000. So if we calculated that now, we can now say you are saying less, so we can just put in brackets so that we can get our figure here. 279,500 minus 87,000. We're going to get your 192,500. You are going to get your 192,500. So we are saying and we are seeing that our gross profit, which is this one. Remember, this one again, we are supposed to give a description, that is our gross profit. So here we are supposed to indicate that this is our gross profit. So having done that now, this description of this figure that we have there is our net profit, because our gross profit is greater than our other expenses. So if our gross profit was less than our other expenses, we are going to get a negative figure here, and we are going to call it gross loss. But in this case, sorry, we are going to call it a net loss here, net loss. But in this case, we have got gross profit being greater than our other expenses, so it's our net profit. So here we have got net profit. Net profit. So this is the final answer that we have, which is representing our net profit. So this is what we have, guys, according to this video on the preparation of the production cost statement and the income statement. Let's stay tuned for more videos to come. Let's subscribe and share. Let's share the link to our friends who are doing cost and management accounting N5, so that they get notified when the other videos are going to come as you prepare for exams. Let's get notified. As for this video, I'm out to meet again in the next video.